Good morning. Henry, can you hear me? I cannot hear you, but hopefully you can hear me. It seems like you are muted. Good morning, good morning, good morning. Audio's good? How's everyone doing? Aiden, Bob, Kate, Craig, Emmy, Franklin, Jed, Ismail, Pablo, Father, and Sarah. Good to see you guys. It is sunny and warm in Florida on this fine Sunday evening. We've got a very exciting call for you guys today. So a lot of good, insightful things coming your way. I can hear you. Can you hear me?
Right, good. Yes.
How's everyone doing?
Good morning, everyone. Good morning.
So this call is going to be a little different today. We've got a lot of cool things coming your way. We do hope that you do stay for the very end because there's going to be a portion of this call that is not recorded. So we're going to stop the recording a little short towards the end of the call. And it hopes that you guys stay. And we've got some exciting news for you guys, for those that choose to stay towards the end of the call. So please, if you join and you have to get off or whatever the case is, if you can catch that very end of the call, towards the very end of it, we are going to stop the recording. And we do have some exciting news to share for you guys. Some exclusive news.
Yeah, special to you all who have been with us for several weeks or even months. We've been doing this for just about a year now. Carson and I were talking about yesterday. So it's pretty awesome to see how far we've come, and we're happy to have you all with us every week. We want to provide you some value and update you with what's going on at the end. If for some reason you are not able to stay for the full call today, please do send us an email to I'll post our email in the chat. Please do send us an email or send us a message on the website using the chat feature in there. But do get in contact with us somehow, because we have some information that we need to give to you directly so you can be part of the next step that we've got. And we will update you on that on the end. But if you cannot make it to the end, do send us a message.
This is definitely the biggest pivot and change we've had since we've started the community, since we even launched the website. So there is going to be a lot of changes. The whole dynamic of firsthand is completely changing. So please make sure that if for whatever the reason is you cannot make the call and you are constantly joining and you are an active community member, please make sure you do reach out to us if it is something that you cannot attend at the very end of the call, because it will not be in the recording. We'll give you guys just another couple of minutes for anyone else who might want to hop in, and we will go over news in about 3 minutes. Anything fun, exciting this week? I see Mauricio just joined.
Good morning, everyone.
Good morning, Mauricio.
Good morning.
I know you just joined, and we'll be kind of a broken record on this, but there's going to be a portion of this call at the very end that is not recorded, and we ask that you do try to stay towards the very end, because it is we are going to be giving you guys some details and some info that is exclusive to you guys that's not going to be shared on the recording. And if for whatever reason you cannot make the recording, please make sure that you reach out to us via email. We put the email in the chat, and reach out to us so we can get you those details as well. But it will not be on the recording, so please make sure that if you can, just be patient with us and stay, because the whole firsthand community and the way that we operate is going to kind of pivot going forward. So we want to make sure that we give you guys everything that you guys need via details on how, when, and really why we are doing what we're doing going forward.
Amazing. Thank you.
Not a problem.
We are excited, y'all. We're very excited.
Good stuff. Jed said he started 100K combine with Top Step, and I'm up 1.5K for the week. So I guess that's my positive news for the week. Great.
All right, let's go.
News. There you go. Not bad. Not bad.
Is my mic still coming through? I'm not getting the blue square. Okay. There we go.
Yeah, I see it. You're good.
Let me know if I cut off at any point in this call.
Oh, well.
I'm having a couple mic issues. All right, anything else? Aiden. Week hasn't been very healthy for my eval count. That's okay. Remember, every piece of drawdown is just a pullback for that slingshot to shoot further the next time. So,
And we are in
we'll learn
January.
from it. Yeah, we're in January. It's tougher action. You're going to learn from it, and you'll be right back ahead in February. Just take it slow. Remember, take your time to work out of that drawdown. You don't have to do it all in one day or one trade, and you'll get it back.
I had a little bit of trouble in the markets this week too. We'll go into it on the training exercise. I was able to get some of it back, but definitely a lot more high resistance liquidity. All right, I think I am good to get into the news.
Okay, we'll jump into it.
Will you co-host me?
Oh yeah, my bad.
Chad said, I just love how informative and amazingly accurate these weekly Outlook calls are. They're so helpful, guys. Thank you. Appreciate that. If you look into what we're saying and where we want the market to go, or where we think the market's going to go, and you can understand that, they can be very, 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 very supportive to your analysis as well. So I appreciate that. That's very good. All righty. So let's go ahead and get into the news. So this week, Monday, January 29th through February 2nd. So we're coming up on monthly closure. Keep that in the back of your mind as we go into the middle of the week. We're going to have that monthly closure. There is no news on Monday. On Tuesday at 9 a.m., you have your S&P Composite 20-year HPI, which is yearly on yearly. It's medium impact news. At 10 a.m., you do have consumer confidence and JOLTS job openings. Love this news event. Don't know why. I just love it. I love the way price action usually trades there. So you have some post-equity open news on Tuesday, that red folder, that consumer confidence and JOLTS job openings at 10. Going into Wednesday, you do have some pre and post 9:30 equities opening news. So at 8:15, you have ADP non-farm employment change. And on Wednesday, you have employment cost index, which is quarterly. That's at 8:30. At 9:45, you have a Chicago PMI. That's going to be a medium impact. And in that PM session, starting at 2, you've got your federal funds rates, as well as your FOMC statement. And then 30 minutes after that, you've got that press conference for FOMC. So FOMC on that Wednesday, beware of that, very volatile. On Thursday, you have OPEC, JMMC meetings, unemployment claims at 8:30. So you've got tentative news throughout that entire day on Thursday. And then at 8:30, you have unemployment claims. And then at 10 a.m., you have ISM manufacturing PMIs. And on top of that, you have manufacturing prices at 10 a.m. also. So definitely some news throughout that day. Also, red folders in the morning, but pre and post equities open. And then you've got this tentative OPEC meeting all day. So you should see some volatility there. And then Friday, obviously, with it being the first or the second of the month, but going into the first of the month with the week, you have your non-farm payroll. So at 8:30, you've got your average hourly earnings, which are monthly. You have your NFP, which is your non-farm employment change, and your unemployment rate releasing at 8:30. And then at 10 a.m., post all that, after equities open, you have your revised consumer sentiment. So very jam-packed week. With regards to NFP, obviously, if you're new or whatever the case is, when you're looking at something like that, when you have that monthly rollover, you really want to try to look into having an opportunity in the market either Monday, Tuesday, or Wednesday AM session, and really letting from Wednesday PM session forward play without you. Just be a student to the market. Don't necessarily feel like you have to trade as probabilities go way under. Yes, there is a lot of news in the back half of the week, but it is also stuff where the probabilities tend to not necessarily go in your favor. You tend to go into seek and destroy templates. And if you do not know and you are not experienced enough to really find your way and navigate your way through that type of price action, it can be very tricky, and you are a lot more probable to end up tripping up and making a mistake there. So keep an eye, even though Monday is no news, it's okay. Monday, Tuesday, and Wednesday AM, more specifically, should be really where you should be looking to participate in the market. For me, personally, I really am looking in and around this 10 a.m. Tuesday for this consumer sentiment or consumer confidence and JOLTS job openings. That's where I really, if there is something that's going to play, my eyes go there to see if potentially something can work out. If not, my eyes immediately go to the Wednesday AM session. Now, I do not trade Mondays, but through further study, I've noticed that on NFP weeks, on Mondays, even though there is no news, you can still get pretty clean setups. So just keep that in mind if that's something that you want to look for there. Are there any questions on news as we go forward? Alrighty, should be good, should be good. Okay, alrighty. Well, then let's go ahead and let's go into dollar.
And as we jump into that, if you're just joining the call now, we've had a couple new people join. See my message in the chat as well. We have an important update for you all at the end. Please stay to the end. It's not going to be recorded. And if for some reason you can't make it to the end, send us an email or a message on the website. All right, let's do DXY.
Alrighty, on the monthly, you can see 3 days and 9 hours until that monthly closes. We really have not moved anywhere since we've started pushing up higher. We are just kind of still inside this monthly volume imbalance. Obviously, we have this monthly BISI that we are pulling out of, and then we have this monthly CIVI resting above us. We are kind of in the middle, kind of at a standstill. Nothing more here on a monthly that I'm really looking at. On a weekly time frame, right? As you go into the weekly, you can see that we have now utilized this CIVI as somewhat inversion, right? We are still inside this bearish order block, and we have now taken out a previous week's high, but we pulled back and closed below it. So that's something that I'm utilizing here, but really just main focus is notice how we used this CIVI as, after closing above it, we used it as inversion. More importantly, the consequent encroachment, right? Notice how we didn't get a full immediate imbalance or rebalance here. So there is a little tiny gap here, but notice how overall we were sensitive to the consequent encroachment of this CIVI. That's really my only focus right now on a weekly. Everything really is still sitting here on a daily, right? And we have not really gone anywhere. And that's where when we sit here, we say that the year is young. The year is so young. And on Tuesdays, in January, not Tuesdays, on January, you have to really have that in the back of your mind that the market is not necessarily in a area or a seasonal tendency where it wants to run for any specific thing. You get these holding patterns, you get these types of things that may or may not reflect on indices, and that's where you kind of are in this little bit of a mixed market tendency, which we kind of anticipated with regards to, the dollar might not be going anywhere, indices might be going somewhere, but that's not signaling any sort of trend in any of the two markets, right? Just because indices have been going higher and or lower, if dollar's not really going anywhere, we can't have any strong conviction towards where the trend in order flow is going on a higher time frame basis. So when I look in here, we were curious to see, after kind of getting some form of little tiny closure above here and utilizing this CIVI, right, from this low to this high, including the volume imbalance, did we want to use it as support after kind of pulling outside of it a little bit? And you can see last Wednesday, we were able to kind of go through the entire CIVI and then close all the way back above the consequent encroachment of it. And as of right now, it's utilizing it as support. But what our main focus was understanding, well, we took out the previous week's high, and I was using this candle right here that took out that previous week's high as, utilizing this wick as a consequent encroachment, drawing that out and seeing how we played to see if we got candle closure above it, we could start to maybe look for this buy side. But price has not gone anywhere, right? It's still consolidating. It's still accumulating orders inside this area. Although I do believe that right now, the way it looks, we could continuously go higher. We have yet to get that closure, right? So there's really nothing here. There has not been any further data that has supported that bias, other than the fact of we have not delivered lower either, right? We have still maintained pretty much a good respect of this CIVI as support. And notice how on Friday, right, we came down, we were unable to even reach the consequent encroachment of this CIVI, and we pulled up and we closed right at basically the top half of this CIVI. So I am still looking to see if we want to get higher pricing, but it is this consequent encroachment right here. Until we get a daily above here, I'm not going to be fully convicted on that yet. I don't necessarily think that, because if you think about it, if you go back into a weekly, this is still an order block right here, right? And just because it still hasn't left it yet, if you look at the mean threshold of it right here, right? Yes, we just took out the previous week's high, but we still closed below that mean threshold. So we're still respecting this order block in a bearish stance also, but it's not necessarily being sensitive to it, which makes me think that we could still deliver higher. And that's where indices start to come in play, and where indices are what indices are doing, where they're going, and why they're going that way. Because if you look below us, we do have insufficient price, right? We have a liquidity void right there. Carson, what's the difference between a liquidity void and a volume imbalance? Notice how there is no wicks here, right? That means that there was no trading taking place between this gap and here. There's not a single wick. So that's going to kind of be like a volume imbalance, but hold more weight to it with the idea that there has been no trading at all. With regards to over here, you can see that there's wicks, even though that there's no closure, there's just volume that's imbalanced here. Where over here, there's a complete void in liquidity, right? There's no trading here. So this is very imbalanced still. So I'm curious to see, but price was unwilling to go and fill that, which shows me that there's still probably some form of underlying bullish sentiment that is still flowing through this run higher. So gun to my head, I think that we still continue to push higher, but really that signal to me that we're going to go and deliver into the 104 200s and higher is going to be this closure below, or this closure above this consequent encroachment of this daily wick right here, which actually aligns with the mean threshold of that weekly order block, right? So in and around that 103 700 area, 103 661, in and around that level, if we can start to get closure above that, I think that that'll signal us to potentially go higher. And if and when we do start to see indices drop, then we can continue to maybe see a trending market. But as of right now, they're not aligned, right? They're not anti-correlated, which is what we want, right? To see a trending market, we need to see DXY go either down or up, and the indices do the opposite. But if DXY is not going anywhere, and the indices are going in a direction or even not going anywhere, there's really no stance there. So that's my main focus, is still just being patient, waiting to see if we can get some form of displacement in any of the two directions. To me, I'm aiming towards higher prices, but I could be wrong. There's still not enough data that I can hold that will weight my conviction to say that that can happen. If we do get closure above here, then yes, I would like to see price start to run higher, and I would maybe start to look for potential runs into this buy side liquidity. If we do hold this and we aren't necessarily giving way to the consequent encroachment and we start to come down, then I could potentially see price going lower. If we do get back below this consequent encroachment with regards to closure, I would like to see price maybe come and try to fill in this area that is imbalanced, right? So my two main things that I'm using to direct me in price this week, because we have NFP, I believe we will get one of the two, is do we get closure above 103 661 and around this level from a daily perspective? Do we get closure above it? If yes, then let's aim for this buy side liquidity up here, right? That's one stance. My second stance on the downside would be if for whatever the reason is, if we get closure back below inside the CIBI, more so the consequent encroachment, if we can get closure below there, then I think that we could start to run inside here and then maybe come down lower in here. So those are the two things that I'm looking for. I'm kind of waiting and watching, not necessarily putting too much weight on one or the other until I can see one or the other. And I think that this week it will give it to us. And really also seeing where this monthly closes, right, in the middle of the week. So where this monthly closes, right? Do we close above or below this volume imbalance? Do we close inside of it? That's something that I'm watching as well. Other than that, that's really it. There is not a whole lot of data. As you can see, we've still just been playing in the same range that we've been talking about over the past week or two. And those two levels right there being the 103 661 area. If we get closure above it, great. Let's aim for this buy side liquidity. If we don't necessarily get closure above it and we do hold this high because it took out a previous week's high and we kind of respect it and go lower, then I'd look to see if we can make our way down to the consequent encroachment. And if we can get daily closure below that, then I'm going to start to look for this area right here to fill in this liquidity void. And then if we do want to get even lower than that, we have relative equal lows sitting down here and obviously some unfilled price here. So taking those two opinions in the market, seeing which one it wants to give me, and then reflecting that into indices and seeing what they look like, and then seeing if we can start to get a crack in correlation between the two, right? If dollar starts to go lower and then ES looks like, or NQ looks like it's going to continue higher, great, we can start to get a signal that price might be in a trending market again, or vice versa. If price does want to go higher and close above this and start to aim for this buy side liquidity, does ES and NQ start to show a top? And do we start to get some form of displacement lower on indices? Then we could also signal towards a potential trending market again also, right? That's the thing too, is even though we have maybe delivered higher on indices, that does not necessarily mean we are bullish, because the dollar is not very clearly going lower. That's how you're going to get confidence in whether or not you're in some form of higher time frame trend, right? If dollar is not going anywhere, you cannot hold weight on whatever direction the indices are moving if they are moving, right? So if indices are moving in one direction and dollar's not moving at all, you have to kind of take that with a grain of salt. You cannot necessarily expect that that's going to be your higher time frame trend until you see dollar move with conviction in the opposite direction. Hopefully that makes sense. Any questions, comments, or concerns there? I think that's it for me. It doesn't look like anyone has any questions. If you have just joined the call, and you're late, please make sure that you stay towards the very end. We are having a portion of this call that is not recorded, where we're going to give you details on where Firsthand's going next. And we're kind of pivoting how we're utilizing the community. And there's a bunch of details that we have to give you that cater towards you. And we want to make sure that you get that so you can move forward with the community. Let me see what else here. This daily consequent encroachment area looks to also tie back to a daily order block from December 2nd that you mentioned way back then. Is this order block still important in current analysis? Let me go look. So you're looking at December 2nd. I think you're looking at this order block in here. You're looking at it on a daily time frame? I'm assuming you're talking about candles up in here. If you're looking at December 2nd, are you talking about this area of price? Yes. Yes. So I'm still utilizing these in here, but really just utilizing it from a weekly perspective. Taking that whole week's worth of price and seeing this as a weekly order block, I'm still utilizing that. And that's another thing too, is that, yes, we're utilizing the mean threshold of it, but something that could also help you is taking the low of that and the open of that. And if price does want to get back below it, right? If we do want to get back below it, and we start to get closure on the daily below it, see if for whatever reason we can use it as support, or excuse me, as resistance and go lower, right? So really just the whole idea of, if we do get back below here, do we start to respect it in a premium manner, right? You could also utilize these 2 points also to guide you with regards to if price is going to want to go lower. Good catch. Other than that, that's really it for me on DXY. I'll give it over to Henry. Just like I said, if you just hopped on the call and you are a little late, just make sure that you are staying towards the very end, as we are going to have a segment of the call that is catered just towards the people that are on this call, not necessarily recorded. So please make sure that you are there. And if for whatever reason you cannot make it, please make sure that you email us so we can get you the details accordingly also. Other than that, that's it. All you, Henry.
Okay, awesome. All right. Just get mine up here. We'll jump right into indices. Thanks for everyone. Thanks for being with us today, everyone. Great to see some new folks coming in as well. All right, here we go. Everyone see my charts? Good. Okay, good. Okay. All right, so indices. Take a look on a very broad perspective first. You can see I've got ES here on the left and NASDAQ here on the right. NASDAQ has made a new all-time high, which we saw this past week. And ES has not yet done that, but on the way toward it. Right? We've been working above old highs. We do have, if you look here on a daily chart, this is a weekly chart, but if you look on a daily chart, you'll see this as a swing point right there. So that's a prior weekly high and a daily swing point for ES to reach to as buy-side liquidity. And then, of course, we have all-time highs above here. So I'm not immediately looking at this as an idea of SMT, right? Just because NASDAQ has made a high and ES has not made a new all-time high yet, we don't immediately see that as an SMT. Instead, I'm just viewing that as NASDAQ has been significantly more bullish than ES has. And ES can continue to reach up to the buy side. And we've seen that bullishness throughout the past several months too, right? Like remember when ES had this deep retracement and we were looking to inefficiencies down here, and if it really dug deeper, potentially sell side below these lows, you can see how NASDAQ, all it did was come back into that midpoint of the range into this old high right there, and then working higher. So ES dug a lot deeper. It's been the weaker one of the indices, where NASDAQ has been making this run higher. So you can keep that in perspective when you're thinking about, are we going to continue reaching to new highs, or is this potentially a top being formed here? Go ahead, Cengiz.
Yeah, I had a quick question. I'm seeing on your chart the ES one or the continuous contract for the futures on the S&P. On yours, yeah, we don't clear it, but when I look at my trading view, it looks like it's cleared. I'm trying to figure out how.
Click this B adjust button down here in the bottom right.
Oh, I see. Let me try that.
Yep, that should do it.
There you go. That did it.
Yeah, that's why we don't really look at the continuous charts when we're actually trading and looking at the current price action, because they don't it doesn't give you the most accurate description of things, right? But since we can't see price data on the current monthly contract past like the beginning of 2023, we need to look at these continuous charts to see what exists beyond that in terms of buy side liquidity and previous inefficiencies. Like here, we had this SIBI here on NASDAQ that we reached up into a few weeks ago. But I'll jump off the continuous charts now into the current monthly contracts. It's just important to note here when you're looking at potential price targets, if ES is going to reach up into these highs, which is kind of my expectation working forward into the next month or few weeks, we do have buy side liquidity here at 49.59.5, and then of course all-time highs above the January 2022 highs at 5,028.25. All right, I'm going to go into current contracts now and look at these on a more individual basis. Okay, so ES first. I'll start on a weekly chart here. So we talked about 2 weeks ago now, or it may have been last week and then mentioned again on the midweek review, how we wanted to see when price trades into this BISI right here, and I'll mark it out just to be clear. When price trades into this BISI, what happens after that happens? Do we see new displacement to the upside, or do we start to see displacement to the downside and work down toward that monthly BISI, which we had down here as well? If we look on a monthly chart, you can see that right there. And what we've seen is that ES has worked up toward the buy side, and it's not only done that, but it's created a new BISI in here as well. So what we're seeing is we're continuing to see new displacement away, which is showing that bullish order flow is continuing. So we talked about last Sunday that we wanted to see ideally a new inefficiency be created in here, which we saw this week, because this last week's candle did not trade all the way down to this candle's high. Had it traded all the way to this candle's high, you wouldn't see an inefficiency in here. But since it did not do that, it's now created a new inefficiency in here in the form of a BISI, buy side imbalance, sell side liquidity. So if price is going to continue working up higher toward the buy side, which we saw on the continuous chart, ways in which that could occur is we see continued bullishness right off of here, and continue to see on the daily chart new displacement to the upside, continuing working higher and not trade immediately into here. Or you could see earlier in the week, price come back into this inefficiency and then continue to work higher. Okay, so just be mindful of this on your weekly chart. And then we drop down into a daily. Let me translate those over. All right, so there we go. There was our weekly that we traded to down here, tapping into that consequent encroachment of it, midpoint right there, and then working off that high, coming back into a daily BISI right here, and then creating a new BISI on the daily right here, and also on the weekly, which is this gray box right here. And so now you see, since Monday, we've had pretty bullish price action, right? Not too deep of moves higher, but we're continuing to work along higher up toward our first standard deviation, which we get from this fulcrum point right here, from the low to the high, projecting that out. And then we also have buy side above here, which we saw on the continuous charts. Go ahead, Essence. Essence, do you have a question? I think you're muted.
No. I accidentally hit that. Sorry.
Oh, okay, no worries. Okay, so you can see how we've continued to have this bullish price action throughout last week, leaving a volume balance here, and then creating a new volume balance on Tuesday, another on Wednesday, and then trading higher on Thursday, and then on Friday coming down, tapping last down close candle, and then closing back up in the upper portion of the range. So we have all these inefficiencies below price now in the form of these volume imbalances here, here, and here, and of course the weekly SIBI below. So you want to be aware of these points as price continues to work higher, which is most likely what we're expecting to see here. Price can trade into these inefficiencies and into the weekly SIBI here, or BISI here, excuse me, and then continue to work higher. Let's see, what else to touch on ES? I think that pretty much covers it on ES here. Since we are, I'll jump back to the continuous chart real quick. So I'd like to mention, when we are in such close proximity to the buy side up here, you can look at this whole thing as a market maker buy model. So we have your original consolidation up here, your distribution, redistribution, smart money reversal down here. This can be your low risk buy in here, and then your reaccumulation, and then your distributing offset distribution above these highs. Okay, so as we get in such close proximity to the buy side up here, where we'd expect price to be reaching for, you don't want to see a lot of deep retracements at this point. That's why ideally price does not really go much lower than this weekly BISI that we have right here. At this point, it doesn't really make sense for ES to come all the way down to the monthly BISI down here before reaching up to the buy side. Yes, it could happen, but the most ideal price run, now that we're so close to the buy side, is to see a pretty low resistance liquidity run up toward the buy side up here, which means that you can expect price to be moving smoothly toward the buy side and not having a lot of deep retracements into discount arrays. So while we could trade into this BISI here and even to this last down close candle right here, I don't really want to see price back below the mean threshold of this down close candle. So if you take your fib and put it on that down close right there, we don't really want to see price closing back below here at this point. So on your daily chart, if price does reach down to here, you don't want to see candle bodies closing below this level. Instead, we'd like to see a low resistance liquidity run, just using the discount arrays created as price continues to trade higher to work up into the buy side. Okay.
But do you feel that it's more likely that we retrace around the 48-28 area to go higher, or do you feel, or do you think it's you know, probability wise?
48, 28. Oh, okay. Yeah, into the order block.
Like,
yeah,
like
my expectation
looking
would
to
be
trades more specifically for looking to trades into this week. How should, I mean, we're still approaching it with a bias that is bullish, but at the same time being aware of all these inefficiencies that we have to the downside to go long from
Correct.
there, right?
Correct. You want to be aware of these inefficiencies. And Michael talked about this in a live stream he had last week as well. When indices are reaching all-time highs, you have to go in with the expectation of price continuing to go higher until that is proven wrong in several instances, which means if you're taking trades that are normally supporting a long bias and that you would normally see working out as expected, so like trading into a discount array or an inefficiency and then continuing to work higher off of that, you need to see that fail several times before you start to support a short bias. Because when we're trading at all-time highs, there's no way of knowing with certainty how high or how far price can go. So ES hasn't reached the buy side yet, but NASDAQ is now trading at an all-time high, and it can continue to run and run and run much higher. And you don't want to be trading against that as a short player for anything more than a scalp until you have more evidence of the fact that discount arrays are failing and long opportunities are not playing out.
Where I struggle is, for example, I'm sure that you're gonna go on the lower time frames, but you will see on the 4-hour time frame that we have violated already 3 fair value gaps on the 4-hour time frame. So I know that the rule is you get 3 period arrays that are getting violated. You know what's next. So if you're on the wrong side, so that's
I'll take a look at on the 4-hour. Where are you referring to, Mauricio?
No, NASDAQ. I'm sorry, NASDAQ.
NASDAQ. Okay, we'll get to NASDAQ in just a moment. But here, you could see ES continuing to find support out of daily and weekly and 4-hour PD arrays, continuing to work higher. So you have your 4-hour right here. And this is also a daily. NASDAQ traded into the daily. ES just into this 4-hour BISI right here, continuing to be supported there, working higher to new highs, coming back down into a discount. So if you're looking at your range, right here, take your low to your high. Below equilibrium is a discount. So we have 4-hour BISI right here. Price trades back into a discount, allows for more accumulation inside this inefficiency. And then price continues to work higher up into new highs. Okay, so now we just want to see this week toward the start of the week, and then we'll see how it develops later in the week. Off of this information, does price work into some of these inefficiencies lower here, these volume imbalances, or even down into the weekly BISI below to set up for a run higher later in the week? Or do we continue to press higher earlier in the week and then potentially have if we press higher earlier in the week, the two outlooks that I could have are, we're either going to have a really nice trend week where we run through Thursday likely to create the opposite end of the week and continue to trade higher up until Thursday, or we can trade higher earlier in the week and then use some of the news like we do have FOMC this week, right? Let me see if I missed that.
Yes, we do.
Yes, we do. We do have FOMC.
Wednesday.
So if we trade higher into Wednesday, the opportunity is that Wednesday can continue to move price higher or trade price back into some of these inefficiencies that exist below. And we really got to wait for intraday price action to get an idea of what's likely to occur there. So as you go into this week, you just want to be aware of, on the weekly time frame, this inefficiency that now exists below price. And then on your daily charts, the volume imbalance is below price between where it is now and the weekly inefficiency right here. And then, of course, in terms of price targets, you have your 1 standard deviation up here. And then if you look to your continuous chart, you can see the buy side liquidity that exists from back in 2022. Any questions here on ES? Or we'll jump to NASDAQ. Looks like we're all good. If you have any questions, feel free to pop on the mic. We'll jump to NASDAQ here. So NASDAQ has now reached all-time highs. And so like I was saying before, we need to see several instances of long opportunities not playing out in order to start to formulate a short idea. Otherwise, the bias needs to remain to the long side because we don't know how far above all-time highs price can extend, and you can continue to see serious runs, especially given the fact that a lot of people would have been getting short back down in this area expecting a breakdown, and now they're getting, ripped to the coals right here as price continues to take out buy side and reach higher and higher and higher. And price can really start to reach against people who have tried to be short throughout this. And so we don't want to be going against that short bias until we're really given an idea that, or against the long bias, excuse me, until we're given several examples of long opportunities that we would expect to work out failing. And we want to do that across a higher time frame, not low time frames. Like if you're seeing 1 minute trades to the long side not working out, that's not really a good judgment of, okay, it's time to be a short player, because you need to be working off the higher time frame basis. And so that's why we always start with our higher time frame charts, your monthly, your weekly, your daily, and work down from there. So same ideas here on NASDAQ. We traded into the weekly BISI down here, into the overlapping PD arrays right there. And then we've created a new displacement off that, continuing to show bullish order flow as we work toward the upside. And this past week, we did trade through all-time highs and then close back in the range. So this next week, we want to see, does price come down into this inefficiency? Just looking at the candle structure here right now and how we did close in the lower portion of this range, my expectation is that NASDAQ will probably reach back down into this BISI right here. And so you want to be aware of the range of this BISI. You want to look at the consequent encroachment right here. And then you also want to look at your overlapping PD arrays right here. So where does the inefficiency align with your old high? So keep this level marked on your chart, 17,165.25. And then from here, we will go into the daily chart. You can see that projection again on the daily chart. So using this as the fulcrum point, you take the low all the way to the high and extend that. So you have your half standard deviation, which was reached right here, and then your 1 standard deviation. So you can see the responsiveness at these levels, right? We did end up going back to close through it after trading back into a weekly BISI right here, or a daily BISI, excuse me, right there on Tuesday, making the low week and trading higher. But see on Monday how we traded right into that standard deviation and then came off the high. So going into this week on NASDAQ, just be aware of, remove that. This is your weekly BISI below. So be aware of that and the overlapping PD array right here. And then we do have this volume imbalance right here, which is your new week opening gap as well. Okay, it's a little different from your new week opening gap just because of how prices are calculated on the daily chart, but go into your hourly chart and find your new week opening gap right there and see how that is utilized throughout this week. Okay, so you drop down into the hourly and we can see Sunday, let's see, right there, 16 to 18. So it's pretty small. This past week, 16, Friday, Sunday. So that's your new week opening gap right there from the past week. And you can see how on Friday, price came right back down to touch it again. And look where it stops, right on the dot. Okay, so these are utilized throughout the week and throughout future weeks as well. So you want to be aware if your new week opening gaps are on the chart. Dropping back to a daily. So that's a new week opening gap. Price came back there on Friday. So just on a daily here, of course, you want to be aware of the weekly inefficiency below. And you want to be aware of buy side above right here to continue to work back into. Okay. It's fine for price to trade back down to this overlapping high. It's fine for price to trade into this lower inefficiency right here. What we would not want to see is for price to trade down and close below the mean threshold of this down close candle here. So if you take your fib and put it on the high to the low, 16,686.5, you wouldn't want to see candle bodies closing below here. Okay, if you start to see that, then that points toward the idea that price can work down toward the sell side and the monthly BISI that we have down here. Until that happens, the expectation is that price will continue to use discount arrays to work higher. Okay, I'm gonna take a look at the chat. If anyone has any questions, feel free to come on the mic. Aiden says, I'd like to confirm what kind of PD array is the high of that candle at 17,165.25. 17,165. Oh, what kind of PD array? It's just referred to as an old high. So old highs and old lows are PD arrays as well.
Henry, can you look at the 4-hour on
Yes.
NASDAQ?
Mhm.
So on the lower time frames, if you see, there are three, one, two. I believe that there are three fair value gaps that have been violated on the bullish side, closing below.
Here? Is this
Yeah,
where you're referring
exactly.
to?
Exactly.
Yeah, you could take a look at that. The only thing is that these are not considered discount arrays within this price range. So if you take your fib up to from your low to high, your equilibrium is right here, which means I'd only really be interested in this inefficiency here and this inefficiency here. And so price is just traded into those, and note how the candle bodies are staying within these inefficiencies here. Now, this is just a 4-hour chart too. And remember, we want to work off the higher time frame charts and imbalances. And so you have a daily BISI, if you look on your daily chart right in here, and we have this as the weekly BISI as well. So it's totally fine for these to be traded through or seen as invalidated for price to work to a higher time frame inefficiency. Since, remember how we always talk about when there's a higher time frame inefficiency below, like we have the weekly right here, any price leg that we have off of that. So like here we have a daily chart running higher, creating a volume imbalance right here. And you saw on your 4-hour chart that we traded into the daily, which we had right here. And then we created all these inefficiencies right here. This is viewed as a lower probability leg of price action for taking long opportunities because there's a higher time frame inefficiency below. And price is always going to gravitate toward the highest time frame area of liquidity or inefficiency. And so when we have a weekly BISI below, any 4-hour or daily BISI in here would be viewed as, while it can work, it's a lower probability opportunity.
So the high probability to go long
is inside the weekly BISI.
So basically taking Tuesday low, which now is the previous week's low. That will be a good, with a 1 minute market structure shift, that could be a potential long opportunity there.
You could potentially find that. I wouldn't personally base it off of a 1 minute shift, because when you need to look at things from a higher time frame basis, because something that could be seen as a 1 minute market structure shift can also just be a return into a 5 minute or a 15 minute SIBI. So you need to, what I like to do is, and I can get my list of the time frames how I typically operate, but when I see price trade into a weekly BISI, I usually like to have at least a 4-hour or a 1-hour displacement back to the upside before I'm interested in a long opportunity. So I'd like to see price trade into here, either into the consequent encroachment or into the overlapping PD arrays, which we have here, and then to see a 4-hour or 1 hour, or even better yet, a daily BISI created back to the upside. And then we can find long opportunities within that. Does that make sense?
Yeah, but if I'm hearing you correctly, so you're not really interested in taking loans at this point. You would rather be in a discount and looking for a 1 hour or 4-hour or a daily displacement to the upside to go long again. Is that correct or no?
Yeah, that's just my personal approach to trading, right? Because I trade on such low time frames. I'm typically trading off a 1 or a 5 minute chart that it doesn't make sense for me risk wise to just be buying any trade below the sell side here into the weekly, because based on that, I would need to place my risk all the way below the weekly BISI. And I'm not looking for opportunities where I'm risking 300, 400 handles on a trade. I just want to be in a position where I can risk 10 or 20 handles on a trade. And so I need to see that price is going to continue that bullish order flow before I'm interested. Well, my expectation is that price is going to trade into this area and then work higher. I don't know how deep it's going to trade into this area. And so I don't want to be a buyer until I'm getting confirmation that we are seeing bullish order flow continue out of this area.
Henry, can I add something?
Yeah, go ahead, Carson.
Will you take the standard deviation of that last price swing that you're looking at right there on the 4 hour, that last price swing higher, take that standard deviation and throw it lower. So from that Tuesday low, from there to there. So when looking to see how deep could it potentially go, I would take something like that and look at my projections and see where it lines up. So I could sit there and I could look at that half standard deviation that's basically very close to the consequent encroachment of that weekly BISI, as well as right below it is that overlapping PD array of that old high. So that gives me an extra confirmation of saying, okay, well, even though I don't know how deep it's going to retrace, if I'm looking at the standard deviation of that opposing fulcrum swing that he just drew out right there, half standard deviation of that gets me right in the middle in and around those two other PD arrays. The -1 overstretches it a little bit, but still could potentially happen if we wanted to get a little overextended. But my immediate eye goes to 17,200, which is where that half standard deviation is, because you've got two other PD arrays. You've got the consequent encroachment of that weekly BISI, and then right below it, you also have that old high that he's using right there.
Okay.
Yeah, so it could make sense for price to trade into a deeper discount. If you look at this range as well, you can look at your most energetic price run right here, which we have from this low up to this high. Then you can put on your midpoint, and you see we have a discount below here. So it could make sense for price to work back into a discount where we'd have the overlapping PD arrays right here. And you also have some inefficiency that exists below right here as well. So I don't want to immediately be looking to buy on a 1 minute market structure shift right here. While it's possible price could just barely tap into here and then run higher, I want a little bit more of a higher time frame displacement to show me that the bullish order flow is continuing and that we're not going to have a deeper run back down into a discount right in here. So if that's going to happen, then I'm going to allow price to trade into this area and in here, and then look for that new displacement to the upside, and then look to be a buyer inside of that new displacement.
Pablo,
That make sense? Oh yeah, Pablo, could you please explain how you're drawing those standard deviations? Yeah, so I just have.
I was going to say he was talking about the first one you drew.
This one here?
Yeah.
I'm assuming you're just asking about how I make the template for it. So you just take your fib tool and you can draw your fib, and then you go into your settings. And I have one that's, and you can screenshot this if you like, I have one that's for projections. So you can make templates if you want. If you make the settings, then you can just click save as, and you can save it as a template. So I have one called projections, and this is what I have on it. So I just have 0, 1, and I have 0.5, 1, 1.5, 2 standard deviations, all the way up to 4. And I can add more if I like. Does that answer your question, or are you talking about where to draw them from? Oh, how do you decide the high and low? Oh, okay. When I'm drawing, if you're looking at the first one, like this one that I have here, I just look at the full dealing range that was traded to the downside before price reached to the buy side. So I look for the highest high. I go to my highest time frame basically. So your weekly, you're seeing it from that high to that low. And so I'm looking at it as a fulcrum point. So imagine this whole price swing down here to be a door on a hinge. Okay, and the door has swung down, and now the door closes when it reaches back to buy side, and I want to see if the door is fully open. That's your one standard deviation. Okay, so here's the door is shut, and then swung open to one side, and here the door is now shut. And then if you take this and flip it to the upside, that's your one standard deviation with the door fully open. Does that make sense? Okay, sweet. Sarah says, cool, I didn't know how to create a FIB template. Yeah, you can create templates for pretty much all of the tools that you can use inside TradingView. They're super helpful to just be able to work quickly. Ismail said, anyone not familiar with standard deviation projections, I highly recommend you look up Trade Dexter on Twitter. He's had a couple of YouTube videos. Yeah, I've seen some of his stuff. He's got a lot of good stuff on standard deviation stuff, so he'd be good to check out. Any questions here on NASDAQ?
I hate to ask this question, but
Go ahead.
but I just cannot hold it.
I'm
You guys know that I'm a swing trader. I'm holding currently a short, so I'm trying to decide getting into this week. Where should I put my stop? Because I got a really good entry actually. I'm at 17,621. So I'm at like 120 points as of the closing, or 100 points in profit. And I'm trying to catch the Tuesday low by getting into, this week. Can you tell me where will you put the stop on that one? If you were to
we're
have
not in a position to really give trade advice in that sense for trading with actual funds. I would just say that if you're looking in a short position, be aware of the inefficiencies that are below price, and be conscious of the fact that we are now trading at all-time highs and price can continue to work higher. So you don't want to be in a position where you're holding short positions as price continues to make new highs.
I struggle getting putting the stop losses. That's where I usually very good at entries, but on the stop losses I'm like terrible. So I just I have my
if you're
stop
short
loss right now. Yeah,
you're
from
short in the 1600 area.
Yeah, 1600. Actually 621 is my entry. 17,621.
Well, you're already seeing new displacement off these highs being created right here. I mean, we can't really give you trade advice, Mauricio.
No, I understand.
If I were in a short position from up here and price has already made this displacement and then worked off into a new low, I would be at least at break even at this point.
A break even. Okay. Thanks.
Alrighty, Henry, do you want to go into your training exercise this week, or you want me to hop online?
I didn't have an opportunity to do one this week.
All right, I can get mine.
I'll jump it over to you.
Alrighty. So the whole idea of this week's training exercise was to utilize some form of array on a daily. And so I will go into mine really quick. So if I go here, I'll just show you guys my two daily time frames that I really was working off of. So really what I was utilizing is this week, we talked about it on our midweek call. This rejection block right here on the daily, I was using the consequent encroachment of it. And I also was utilizing the 25%. So when we have this long wick in the form of a bearish rejection block, you can break that down. Obviously, that midpoint of that is going to be your consequent encroachment. And then from that, you can use that as quarter points, the 25%, which is the consequent encroachment of the consequent encroachment, and kind of use that as quarter points. So as I kind of go into the 1 minute, I will show you guys where I was active. I was using the micros for this one. And I will show you guys in here. So my first idea was, one second. So my first idea was the idea that we had already taken 930 highs. So we had taken buy side twice in here. So you can see buy side was delivered once in here and then a second time in here. So coming off of that, I was looking to see this BISI be used as inversion, with the idea that I could get a low resistance liquidity run below these lows. And you can see my entries in here right as we press up into this using this BISI as inversion. My stop loss was obviously above this BISI, above this SIBI, and above this volume imbalance. And you can see that price pushed back up into this area, tapped this volume imbalance, didn't necessarily stop me out there, but was unwilling to provide the sell side liquidity. So I had no room or no action on my trade to move anything to break even or anything. And you can see price did not have the sell side liquidity and came back up and stopped me out right there. So you can see, and the only thing that I was able to do was, instead of keeping my stop at the volume imbalance, once we had created this high, you can see it got very close, did not stop me out there, put me a little bit in profit, but did not take my first area. So I was only able to move it from here a little bit lower to here, I guess you could say. It stopped me out. So from there, I was looking at potential, it was an unwillingness to take sell side. So then my immediate eyesight went to buy side with the idea that we could use this as a breaker. In here, you have a low, a high, you take out this low, and then we did have a little bit of displacement in here. So I was thinking that price would use this BISI and this breaker to kind of catapult price going higher. And my stop loss was very tight because you can see I'm utilizing how the behavior of this daily wick consequent encroachment is. So you can see from there, I was utilizing this. We had just delivered below it and invalidated this BISI. So I was using that as potential resistance. And then you can see we got back above it. And so my stop was a lot tighter here. My stop loss was below the breaker, below this BISI, and more importantly, below this daily wick consequent encroachment. And I did not want to see this BISI below the daily wick consequent encroachment. I did not want to see that fill. So I got in right here, and then you can see it was not having that either, right? It ended up coming out, stopping me, but did not run the buy side. So I took a couple losses there, but I was still under my risk management, right? I still technically had risk to play with on the day. But there was nothing, by this time it was 11:45. There was nothing else for the AM session for me. So I took my two very small losses and took them with me into the PM session. As the PM session unfolded, you can see price ended up not taking the buy side, delivered very well back below the consequent encroachment of the wick. And this is where I started to use this 25% of the wick, because my main idea on this original short is really what I was aiming for here was, can we fill this entire displacement? And you can see the very clear equal lows in here. So going into the PM session, we started to deliver inside the consequent encroachment of it, pushed higher, did not get back above this daily wick consequent encroachment, came back lower, had some form of shift in structure in here. We just started delivering close below the lows. And then I had two areas that I was looking for my entry. So the idea was we had this SIBI and this BISI. And I wanted, obviously, the SIBI to respect, but more importantly, the BISI as inversion to respect. So my stop loss was here. You can see I enter in here as price first delivers right there. And then you can see right here, as price is kind of just playing in here, I add more entries in there as well. So you can see 10. I'm using the micros. So in reality, I was trading with 15 contracts right here. I was trading with 15 contracts right here. But if you want to notice, though, my stop is usually somewhat smaller. My stop is very small, so I'm okay with using that size. So I put 10 in here. I see the way it respects this inverted BISI. And so after that, I add more contracts in here. Price does come a little bit higher, but watching the closure and being able to understand that price did come up to the consequent encroachment, but did not close below it. Still, I was fine sitting there. The drawdown was not bad at all. Just waiting. That's why I had my stop loss where it was. we start to displace lower. And as we delivered below this low, because my idea is that we're going to fill all of this, as we started delivering below, this is why when you have been out of the markets for as long as I have, you tend to potentially make these very elementary mistakes. I meant to buy back some contracts in the form of taking partials. I accidentally pressed the sell button, but that's okay. I was so in profit. It did not necessarily take a loss from me. It just put me in a position where I had to automatically buy back. And then I even bought 2 more because that's where I would have taken partials. So I take some partials as we fill the bottom of this, right? As we've delivered in here. Once I do this, so once I accidentally sell, but then immediately buy it back and buy back more and take partials, my stop then goes to break even. From there, I'm letting price trade. Price comes down into here, we get more displacement. Notice how because I have so many contracts, I'm not necessarily needing it to go below this low for it to pay me. So I'm taking off more contracts in here with the assumption that we're going to go lower into the sell side. But you can notice that we did not. So I still took profit there. So I still have a lot of volume on the trade. So once we're trading into here, I'm utilizing this overall displacement. And I want to see price use it as inversion. So once I see price make this high in here off this consequent encroachment, I immediately move my stop from break even into profit, and you can see it knocks me out in there. But if I show you guys the business, right, you guys can see this first trade right here, I lost 0.3%. The second trade, I lost 0.2%. And then you can see over here, I was able to at least mitigate half of that, right? So still was not able to mitigate it all back in one, but I still was able to utilize the trade to at least make a losing day not as losing. So wasn't necessarily a great week. I was really hoping we would displace below the sell side. We did not, but I didn't necessarily need it to at least be profitable on the trade. Was not able to gain it all back, but I was able to gain some of it back, and I was able to at least end the week on some form of winning trade. So I'm okay with it. I still kept the account balance above water. Really, that was it. I'm still kind of getting in the swing of things. Price is very fickle. 9 times out of 10, you would like to see price deliver to such clean lows. It did not. You can see it pulled all the way back, and now we have these clean highs. And obviously, throughout the week, we ended up taking the highs and we left these lows. So just something to think about there. You know, if I could show you guys or get one thing out of this trade that you can take for your trades is don't necessarily want or feel the need to have to take partials under a certain liquidity pool, right? Even this extra exit that I had right here, where I partialed out 3 more contracts, it was the idea that price might not do that. Right? Even though it looks clean and I've seen it do it 7, 8, 9 times out of 10, I don't necessarily need that to be profitable. Prices, I'm already that close to it. I might as well pay myself some more. So from there, that at least helps me. And then obviously being able to move my stop loss where I needed to in profit, I was still able to manage some. So I didn't get it all back, but I got some of it back. Was able to keep the account above water, and I survived another week. Other than that, that's really about it for mine. I will check the chat to see if anyone has any questions. Any questions there? All good.
This is a great case study too on the challenges of being short in a market that is very bullish.
Yes. Right. You can see that, you know, being short up here, really, if it did not have the willingness to take the sell side liquidity in here on this short trade, right, came all the way back up. Same thing here, just at a bigger scale, right? It should show you the underlying sentiment of how bullish this market really is. It's not even willing to take the liquidity under here. It's hard counter trend trading, and this is the second week in a row I've gotten somewhat burnt trading counter trend, right? So I've got to note that, and I've got to understand that, and I can do one or two things. I cannot necessarily trade the counter trend and be more patient and wait for long entries, and or I can have a lot less reach out of my sell side targets, right? So if I am short, I need to shorten the amount of the market that I expect out of it, right? So instead of aiming for 10, 15 handles, maybe I am only aiming for 5 handles. So something to keep in the back of your mind there, that when you are counter trend, you cannot expect what you would normally expect out of something in a trending market. But that was
something to look at here is if you look at your largest price run to the downside, like if you look at the highs all the way down to the lows, and then you look at the largest price run to the upside, the lows just where it reached just above sell side liquidity all the way back up toward the highs where it ran, look at the difference in the retracements that you see along that way. To the downside, you see these much deeper, much more high resistance retracements, whereas to the upside, it's minor retracements just into inefficiency or an old high and then continuing to work higher. You're not seeing these deep runs back below the sell side before continuing to work higher. Whereas on the downside, you're seeing these large runs back up into above old highs and into higher time frame inefficiencies before working down. It's a much more low resistance run to the upside when you're trading with a higher time frame bullish bias versus when you are looking to trade counter trends. So you just have to be aware of the challenges if you want to be trading against the higher time frame bias.
Challenging it is. Challenging it is. Okay, other than that, we'll go into this week's exercises for all of y'all. Appreciate you guys being active there. So let me go through here. Alrighty, so this week's exercise, obviously we were focusing on the utilization of some form of higher time frame PD array. We wanted you guys to have your entries inside / around some form of PD array on the daily. It could be an order block, breaker block, rejection block, BISI, SIBI, volume amounts, new day opening gap, new week opening gap, higher low, any of them. We just wanted you to start to kind of correlate the higher time frames into your lower time frame entries. So Mr. Rajan, we'll start with you. The duration of the trade was 13 minutes. He had one contract on NQ. The risk to reward was 2-to-1. Time of day was the New York AM kill zone at 9:50 a.m. He's playing that macro. He utilized, he said he forgot about the daily PD array for the purpose of this particular exercise, only used displacement candle that created a 5-minute SIBI and bearish order block on a 5-minute time frame. He utilized equal lows on NQ in the low resistance liquidity run signature stop placement, was using a mental stop failure of 3 PD arrays in close of the body in the 5-minute displacement. I will add there, instead of using a mental stop, just find the 3 PD arrays and place the stop there. Don't count on yourself to close out of the trade. Put it there. So if you're utilizing a failure of 3 PD arrays, find the 3 PD arrays and place the stop there. Don't necessarily use the mental stop. That's a lot harder because you have to make the decision at that point in time. Let it make it for you. Partials taken, since I only had one contract, there was no partials. He did not necessarily go break even. Emotions before, I was specifically looking for SMT divergence after the displacement on the 5-minute time frame. Once I saw the divergence with both ES and Dow, I was ready to take the trade, very calm and detached from the outcome of the trade. During the trade did not deliver with speed. At the same time, DXY was stalling, which made me hesitate whether the trade was correct. I had to sit through some drawdowns, which was very uneasy. Like we discussed last time, I was waiting for 3 PD arrays to fail in body of candle closure above the 5-minute SIBI for me to close the trade. I respected the stop loss sitting through the drawdown. Emotions after, I took the profit a few ticks before the equal lows, and when the market bounced from that, I was glad I did. It was an important lesson to journal during the PM session, and Q did come back and take out those equal lows. So looking at it here, you can see he's using this right here, going short, and he has this internal sell side liquidity that he's using as his take profit. He's not necessarily needing the external to trade, kind of like I did in my trade. He's noting that the body's respecting the consequent encroachment of the 5-minute SIBI while tape reading. So he's understanding it as he's in the trade, watching this, and even on lower time frames to see how everything respects. Notice how the candle closure is respecting that consequent encroachment and is able to deliver down there, and he's able to pay himself in profit. Over here, you can see the business, right? Just a couple commissions, and then over there, great trade, almost 0.5%. Yeah, good trade. I mean, you know, there's really nothing here that is flaring of things that you need to change. The only thing that I would say is try to get away from a mental stop and be okay with the idea that where you think that mental stop's going to be, place it, and it, you know, if you're waiting for potential closure above or below it, give it room to breathe. So if for whatever the reason is, you do wick and then close back below something, then you can move that stop above it. But make sure you have it at least there, because I have found in my trading, if I try to use a mental stop, even just fighting that click of, okay, fine, it just did it, click. You have to fight that. Don't even put yourself in a position to make that decision, and just place it there for you. But overall, I mean, it was a good trade, good profit. You have anything here, Henry?
No other thoughts. I think this is a great trade. Nothing wrong with a little scalp to the downside. I think you manage it nicely. Yeah, just same idea. Make sure you're putting a hard stop in there, and managing with a mental stop is dangerous too, because you potentially put yourself in a position to be emotionally compromised if price starts running against you very quickly. Like, think about how you would respond if price ripped right through your entry, starts tearing through the SIBI, and runs fast right above that previous swing high. You want to have a hard stop in there, because your mind can go into shock when something unexpected like that happens, and you don't want to put yourself in that kind of position. So overall, I think great trade, great management, and right idea with all the analysis. So well done.
Good stuff. Alrighty, Mr. Ismail, haven't been active with the group lately. I was moving back to New York. Was living in California for a few years, but here are my trades from last week / this week. See you guys tomorrow. Glad you're here. So obviously, this was the Wednesday AM session. It was a 40-minute trade with 2 contracts aiming for buy side. Took partials a little too early. However, I liked my exit as I anticipated price not sweeping the buy side before deeper retracement. Even though I had a very late entry, I felt confident that the trade I was in, longs on my funded and the breaker. Price delivered in the macro like I anticipated. Very clean chart, by the way. Good fulcrum point that he's using. The -2 lines up here, right? He sees this BISI. He's able to see price move away from the breaker, create that displacement, and he gets a very good entry in here. He's able to take a partial here, and he does not necessarily need it to trade there, right? You're already so close. What's it worth? A 1 to 3 to, in this case, couple handles, with the idea that it could potentially engineer and go lower. So I like that idea. Very clean trade. You can see I can see the way you're understanding how price trades in the breaker, pushing outside of it, seeing that it gives a full fill here, right here, and then basically other displacement in there. Great trade there. And it's inside the macro. So with regards to that specific one, you were inside the criteria. Very good trade. You can see also there was some previous liquidity already taken down in here. Fulcrum point's great. Entry's great, exit's great. I don't really have anything here that signals to me that you did anything wrong. The idea that you took partials a little too early, I don't think you could ever take partials a little too early. I think taking partials is good and healthy, and I think, it's better to take a partial early than it is to take a partial late. So, anything on here, Henry?
No, looks like a great trade. I just would like to see on the first image that you have shared here, where your stop loss.
I'm assuming it's probably, and I could be wrong. I mean, if it was me, I would place my stop loss at this low, but you could have a little bit wider stop at this low, or even just below the breaker. If you wanted to get it a little tight.
I was a little greedy on this. I put the stop below the mean threshold of this down close candle that created the displacement.
Oh, this one?
I like that.
Yeah, that's good. That's fine.
I think that's good.
That's fine, because you've already had price deliver inside the breaker, right? You've already had price deliver in it, and it filled whatever all this. So all this should not be returned to, and in and around this, the top half of this breaker is inside the mean threshold of this down close candle. So really, I'm perfectly fine with that. That's a really good stop placement. A little bit more experienced stop placement, but definitely very good stop placement. Alrighty, next one. So this one was 28 minutes. This was on the 25th, Thursday AM session with 1 contract. Unicorn nested higher time frame Peter array. Draw on liquidity. I wanted to see lower prices after taking all-time highs yesterday. I was planning to hold for sell side if we displaced through the -2, -2.5 standard deviation. We didn't, so I collapsed the trade. My idea was based on higher time frames, and I got a lower time frame model at the specific level I outlined, so I was very relaxed during the trade. So same thing, fulcrum point. He's noting that price takes the buy side in here. That's that last one, that door theory that he's talking about, that Henry was talking about. He's got to stop right here on the candle that creates this SIBI. Price obviously breaks structure, displaces. He's waiting to see in here. He's got a breaker inside this SIBI. He's utilizing that. He also has the consequent encroachment on the daily on the wick right here. Lines up perfectly. So he's got 1 higher time frame array, and then 1, 2 lower time frame arrays that are nesting inside of it. Love the stop here, aiming for 2 standard deviations here, but really aiming for the sell side liquidity down in here. He does not necessarily see price move in the manner that he wants it to, so he's able to take his partial, or not take his partials, but close the trade down here. As you can see, you couldn't have had a better exit. It doesn't matter where in this candle, does not matter where in this candle you are taking it, whether it's at the low or at the start of this candle, either way, right? Very, very, very good exit. You can see from the second you exited from there, the very next candle, price started to obviously run higher. You can see that you were tape reading in here, price to be able to kind of, I bet you were probably watching in here, just watching closure to see if we remained below the consequent encroachment to ensure that you ran into these deviations, and they did. So, I mean, two great trades. You know, there's nothing wrong here.
One thing to note here as well is that exact low where you had your entry point is the 8:30 opening price. So those 8:30 and midnight opening prices are levels you want to be conscious of, because they're areas for price to gravitate and return back to, especially when you have like a news release like this with a long wick on it, like here we had in this example. You don't want to be really targeting the sell side as it could be your terminus if you're reaching below there, but you want to be aware of that opening price of that candle, which is the 8:30 open right there. And if you draw that right across, perfectly aligned with your 2.5 standard deviation. So a beautiful exit. Really well done this week.
Good stuff. Here's his log. Here, let me share this screen. It opens up a new screen. So 1 second. Just to show you guys his log, hold him accountable. Right here. Good start, good start, good start. Don't let it get to your head, but good start.
Let's see your screen.
Oh, was it not sharing?
Yeah, it wasn't sharing yet. I'm not sure if it can.
Okay, hold on. That will. So you guys can see it. First 3 trades on the account. You can see that first trade is, these are his 2 partials on that first week. And then this was his only 1 contract there. So he's up 3% on the account. Everyone can see, all good there? Good stuff.
Oh.
Good stuff. All right, back in it. Who's next? Who's next? Let's go.
Jengiz.
All righty. On the daily level of NQ, I noticed price reaching for the 50% level on the previous day's candle wick. Once I tagged that level, I waited for 9:30 to lend its hand towards the direction it wanted to go. Price swept above the 50% level, and then 9:30 immediately displaced lower, knocking out the 905 low, creating a bearish breaker. I waited for price to trade back up into that breaker and entered on 2 contracts. So it was a 30-minute trade, 2 minis, 15.5 handles, aiming for 47.5 handles. In the AM session, he utilized accumulation, manipulation, and distribution alongside the bearish breaker block, consequent encroachment on previous daily wick and the SIBI. He was drawing towards that 8:30 a.m. BISI candle. Stop loss was the 9:30 SIBI high. I wanted to give price some room to gyrate. I haven't seen that word yet. Once price swept the 932 low, I moved the stop loss to immediate below break even. Gyrate.
I see Michael use that a lot, so I figured, you know what, let me just use it.
There you go. And if you don't know what this is just the same word for oscillate, or same word for breathe, you know, room to breathe. Partials taken, took 1 contract off at the 9:48 a.m. candle when it swept the 932 low, and I noticed that it did not immediately continue displacing downward. Took 1 contract at 28.25 handles. Went break even at 9:46 once price swept below the immediate previous low on the 1-minute time frame. I was willing to let price gyrate as it did in the AM session. I become more comfortable with price flirting with my stop loss, knowing that I placed it in a comfortable location. That's good. I understand that the risk I was willing to take on the trade. I, of course, would have loved to see price drop faster, but I do know that there are days where it's going to chop around and kill the neophytes. So in here, you can see he's utilizing this breaker. He has this 50% level on the daily wick. He's utilizing in here, scaling in 1 more time as it fully fills it. Stop up here. He's able to sit here and pay himself down here based on not having displacement. So he takes a partial there. It comes up and revisits his first entry with regards to this breaker, and he also has this CIVI in here. And I think that this was actually this might have been the same Same trade as
Y'all
Ismail.
killed this trade with the
Yeah.
830 exit.
I was gonna say both of y'all
you,
had the same
Jenkins
exit. Yeah.
and Ismail. Well done.
So good partial here, great exit here, because we all know that based on what Ismail's last trade was, they both had to really in and around the same exit, because price actually ends up going up higher and takes all that out. So great exit there. You can see the business here. He's off to a good start too, a little under 2% on the account there. You can see it here.
Nice one.
Same thing. This was after the fact. Very good exits. Very good exits. Good stuff. Glad I got out when I did. Price immediately went the opposite direction. 1 minute later, there's my depiction of the risk reward. So yeah, great risk reward there. Good stuff. All righty. Looks like Kate got in it too. All righty. Bearish bias. We took all-time highs yesterday on Wednesday. So my idea was that we would have Wednesday high of the week type of weekly profile and seek some form of liquidity. We have built up on the run above all-time highs. NQ pushed higher after the 9:30 open, taking out a short-term high and trading into a 1-hour SIBI. Then price displaced lower with a big SIBI, forming a potential 2022 YouTube model. At this point, there was also SMT with YM and ES at the highs, so I was pretty confident that I could use the all-time highs, SIBI, and bearish breaker for entry. Being a little bit early in the day, I waited for extra confirmation and did not enter until price had closed below the SIBI and then retouched it again from the bottom. I then added a second contract when price pushed further into the SIBI. Stop was using the swing high near the top of the SIBI. I also thought that we had created the range after the 8:30 news, so I was thinking that even if my bias was wrong, we could at least trade to the discount of this range before we moved back up again. My idea was to capture the move down to the optimal trade entry area, then reassess. Emotions. So this is what she's thinking right here. Once it loads. So this is what she's thinking. She's utilizing this whole range, seeing if we can at least come back down into this area in here, and then from there either go higher and or continue going lower to attack the sell side, or just fill this and go higher. So before, I was really nervous to get in this trade, partially because I felt that we were overall still bullish. I still felt confident enough with my read that I didn't hesitate to pull the trigger. During the trade, it was pretty ugly price action delivery as we kept winking to the SIBI and breaker, so it took a lot of willpower to convince myself to trust my analysis. Mainly, I noted that while price kept trying to push into the SIBI, it was having trouble closing above it. Good analysis. After I let go of my first contract near the prior low, then I moved my stop to break even, thinking that price should return to the SIBI if we wanted to continue lower. After I got out of my partial, which was near the equilibrium of the large range mentioned above, price gave me the feeling that it was going to reverse all the way back up and take out the 9:30 highs. I closed my second contract manually before my stop was hit. My stop would have been hit a few candles later, but price then reversed and continued downward and hit the area where I had wanted to take my second take profit. In hindsight, I probably moved my stop to break even a little bit too quickly, but was following my rules of moving stop loss to break even on first partial. So I don't feel too bad about it, as you should not. Better trade management was to reduce the stop loss and move it to the SIBI consequent encroachment after my first partial instead of moving it to break even. This would have allowed me to capture the bigger move down. So all first three trades we've talked about have all been the same, which I think is really cool. You guys are all seeing the same things in here. Both Ismail, Singiz, and Kate all sit here trading the same thing at the same time, which is cool. You can see she's getting in here after identifying how it delivers. She goes in with one contract, and then as we push up again into it one more time, she goes in again with the stop at the consequent encroachment of all of this. Price pushes lower. As we're taking this low, she partials herself out. As we start to make some form of low in here and go above, as she starts to see price kind of give way to this downward momentum, she does take out here with a trail stop right here after it makes this high. And as you can see, it does obviously go to where she was expecting it to, just got out a little too early, but that's okay. She's doing what she should do, which is keeping risk the number one forefront of her trading, which is making sure that she's walking away in profit no matter what. Not all trades are going to necessarily give you as easy runs on liquidity, so that's fine. She's just protecting herself, and it does go into that, which is still a mental win. 13 minutes, 2 contracts, stop above the swing high near the 75% of the SIBI right here. Draw on liquidity was the order block, volume imbalance down in here, and the 8:30 open. One partial, 2.54 and 4.31, which was the potential. Time of day was obviously Thursday, New York AM session. After first partial, she went break even, and then she's using all-time highs, the SIBI, and the breaker also. From there, and then here is the business, still almost a little under 2.5% on the account. You can see the business in here. She's still able, look at the losses or look at the commission. Everything else is still staying in the vicinity of green. Good trade. Look at that. Anything here, Henry?
Now, well done. 3 of you on the same trade. I mean,
Yeah.
excellent management, and it's really cool to see people.
Yeah.
You know, this is shared and transferable knowledge. I mean, you can see that when people are taking the exact same trades together, and it's just awesome to see the progress that you all have made.
Very cool. Very
Hope you're
cool.
smiling about it.
Alrighty,
I
Miss
missed it.
Leslie. Traded the 10 a.m. silver bullet on Thursday, January 25th, after price reached the consequent encroachment of the daily wick targeting buy-side liquidity. The duration of the trade was 20 minutes. I entered in at 49.15 with the stop loss at 49.1350 and take profit at 49.29 for 10 handles. I took 2 of the 3 contracts off at 5 handles and moved my stop to break even. Emotions before the trade, I felt pretty good about this trade because price was really close to buy-side. I felt like I could get at least 10 handles easily before buy-side being reached. Emotions during the trade, started to question my trade as price lingered around my entry point longer than I wanted to. Emotions after the trade, I was a little disappointed that price retraced to hit my stop loss, but was happy that I took some profit, as you should be, and that my stop loss was 2 ticks above break even. Right, so going in here, once it loads. All right. So same thing here. You can see she's utilizing this silver bullet right here, this fair value gap. Price does the shift in structure in here. As price comes in here, she's buying 3 contracts. Up here, you can see that she's selling 2 of the 3, which is good. She's paying herself, not letting it have to go the full length, moving her stop to break even, and allowing herself to still come out profitable and not necessarily have a hit on the trade. You can see that price took the opposing liquidity down in here. You come in here. Good stop. You can see she's using her stop loss on the candle low that creates the SIBI, or excuse me, that creates the BISI. And even though it didn't necessarily hit your terminus, you don't necessarily have to be right to make money. And this is a clear example. This is a clear example of it, right? You can still sit here and make money without having your entire trade be right. Good stop loss placement, good stop loss movement. I'm not sure if it ended up taking, I'm not sure, and I'd be keen to know, did it end up actually taking what would have been your stop, or did it go higher? Either way, it doesn't matter. You followed your rules. I would have done the same thing. After taking partials, I probably would have moved my stop loss, if not to break even, at least a little bit higher into maybe the consequent encroachment of this fair value gap. That's all just at your discretion and at your leisure, as you know, what you like to do as a trader and what your risk appetite is. But overall, I'm glad that you were able to get something out of the trade. I can tell that you're kind of starting to get into the notion of not necessarily needing price to trade all the way to your target without having the idea that you might not need to pay yourself. It's good that you paid yourself, right? You probably feel a lot happier, and you're probably a lot more okay with price hitting your break even at 1 contract, knowing that you took 2 off, rather than having all 3 contracts come back to break even. So I think that's good here. Henry, do you have anything?
I think it's a great trade, Leslie. I love seeing that you're sticking with the silver bullet model too. I feel like I've seen you trade that several times between that 10 and 11 mark. The only thing I want to mention here is just make sure you're being conscious of the risk on these trades in terms of the number of contracts that you're taking. I think 3 contracts might put you a bit over that 0.5% risk. So just make sure when you're doing your calculations in terms of the lot size and the that it respects your stop loss placement in terms of the amount of risk. And you can do that using that position tool that you have marked on there. But otherwise, I think it's a great trade. It's awesome that you took your partials when you did. And well done. Ismail, I see your hand.
If you have your hand, yeah, you can.
Yeah, speaking of lot sizes, I wanted to try out some of the firms that have a lot more wide drawdown. Like the one that uses the CFDs, and I've seen you and Carson use them before. How do you calculate the lot sizes? Because I open up these like the brokerage and like on MT5, and I see 1.1, and like I just don't know what to calculate. And does that count as one contract, or does that count as?
So it's different based on the firm. Henry, I'll let you touch on it. It's going to be different based on what the leverage is, because they all offer different leverage, whether it's 1 to 10 or 1 to 100. Henry, I know you kind of have.
They're a bit trickier. I've seen it actually different across. There's some different CFDs too. Like some of them work with NAS 100, some work with US 100. So it's different for the CFDs you're trading. I think it's pretty much comparable to futures in terms of how I calculate it. Like for the ones that I'm trading, like if I want to, it's like 10 times. So for ES, if I wanted to have, in theory, what would be like 1 mini on for ES, then I would buy 5 lots. But I think that the best option for you is probably going to go, I think some of them, like whoever you're working with, have a paper trading environment for it.
That's what I was
And the
going to
best
say.
option is just going to be go in and play with the lot sizes, like put on 5 and then move your stop loss to 5 handles and see what the risk is for it. And that will tell you what the how much each one is going to be worth. It's tricky to calculate without actually looking at.
It is. That's the first thing that came into mind. I was like, let me just open the demo account and play with it like on Monday, since I'm not gonna trade. And
do that.
It's so weird because on MetaTrader, like when you open up a demo account, it only allows you to add forex pairs. It doesn't allow you.
Oh, really?
It doesn't allow you to add like the indices, which is weird. But I'll dig into it. But
okay.
Yeah, it is weird because it tells me like my contract size is 10. But I'll dig into it and play with it. And if I get to anything.
Another option for you then, if you can't do it on demo, if it's not letting you do it, is go into a trade or don't place the trade, but put a limit order. Like if price is up here, put a limit order for a buy far away from price, so you're not going to get filled. And then you can like right click and do enter limit order, and you can put in the lot size and put a stop loss. And when you hover over the stop loss, it should tell you the dollar amount for that stop loss.
I see. Okay.
And so it should help you to calculate it.
Okay.
And you'll just have to play around with lot sizes from there to learn what it is for you.
Sounds good. Thank you.
Okay.
Alrighty, good question. So going back into it, you can see Leslie's business here, slowly pulling herself out of drawdown, noting that she does not have to make it back all in one. So I like that. Not trying to reach for it all in one trade. You can slowly build yourself out of that. So good stuff there. And I think that is it for this week. So thank you guys for participating in it. Continue to participate in it. We love giving you guys feedback. If you haven't tried it yet, please get in there, start doing some training exercises. Super easy to do, and we'd love to see how you guys do. It was really cool this week seeing 3 of you guys take the same 3 trades. That shows that you guys are, that should show you guys that this stuff is real. Now, before I will end it on this, I will show you guys this week's exercise really quick. And you will note that it is not on the website, and we will show you guys where you can find that after this. But basically, this week's exercise has to do with scaling in and scaling out of positions, as well as stop loss management. So really nothing technical here. This week is all, you can use whatever model, whatever technicals you want. We want to see more so we're diving into the management of things. So make sure that everyone make sure that you are using the micro contracts this week to ensure that you can utilize more contracts to trade with. Trading is open Monday through Wednesday AM session. Because of the NFP protocol week, we do not want you trading the back half of the session. And really your goal this week is to follow the following, right? So we want to see 3 separate scale ins and 3 separate scale outs, right? So we want to see you scale in your entry 3 separate times. It could be 3 separate times in the same area of price. It could be 3 different P arrays. However you want to do that, that's completely up to you. You can scale in all in the same area, or you can wait for price to deliver away as you're in profit and scale in. Just 3 separate scale ins, 3 separate scale outs. So really two partials and a terminus. After your first scale out, go break even no matter what. And we want you to at least have 1 trailed stop profit after your second scale out. So once you scale out once, go to break even. Once you scale out twice, trail your stop and profit. Those are the only things that we ask. We don't necessarily need your terminus to hit, but 3 separate scale ins, 3 separate scale outs. After that first scale out, go to break even. And really the reason for this is we want to see where that scale out is. Because if you can get to a point where, yes, you might have scaled out at 5 handles and that's great, but the odds of you potentially going to break even and having it come back and hit you could be potentially likely. So really the main focus is to really eye in and try to understand the best possible area for you to scale out, with the idea that if you go to break even, price should not return to that level. That should be the main focus, is trying to find a very good area in the market to scale out that will call for price to not come back down to your entry, right? And then from there, your second scale out, your second partial should have then provided an area in the market where you could trail your stop and profit also. So really, that's the goal for this week. 3 scale ins, 3 scale outs. Make sure that you go break even after your first scale out. So choose that scale out wisely. And then from there, after that second scale out, trail your stop. And then from there, and only trail your stop once. You know, you can do more if you'd like, but make sure that you at least trail your stop once. Make sure that we see that. Make sure all your account balances are still the same and rolled over from next week. Do not reset them. Other than that, that's really same here. 3 separate scale ins, 3 separate scale outs, break even after the first scale out, 1 trailed stop after the second scale out. Only Monday through Wednesday AM session. After Wednesday AM session, do not place a trade, just study for the rest of the week. Other than that, same thing here, 2 trades maximum for the week. If you're currently in profit, just risk 0.5%. If you win it, great, stop. If you lose it or go break even, you can go back at again with half the risk at 0.25%. If you are currently in drawdown, risk 0.25%. If you win your first trade, stop. If you break even, if you go break even or lose your first trade, go back in at 0.25%. Obviously, target at least 5 handles on ES, 10 pips on Forex, and 20 handles on NQ. But make sure that you note for this week, what's important is that first scale out. So if you think that you can just have 1 scale out at 5 handles and then move your stop to break even, well, note that that could potentially call for that to be break even. The goal is to not get stopped out at break even. That's kind of the theory and goal behind this week, is put your stop to break even with the idea that it's not going to come back at break even, right? So that's the idea for this week. Same journal process as always. Any questions, comments, or concerns on this one? All good here? Before we go into the next segment, which will not be recorded, so hopefully if you are on this call right now, we are about to end the recording and share something with you guys. If you guys are watching this recording and you're curious as to what potentially is going on outside of the recording, feel free to reach out to us, message myself or Henry inside the website, and or email firsthandtradinggroup@gmail.com. We will respond back to you. We know that sometimes you guys have instances where you guys cannot necessarily make it. You guys have responsibilities outside of this at this time, but you do show up every week on the recordings. We will factor to you guys also. Please make sure you reach out to us. Other than that, Henry, if you have any other things to say before we end the recording, you can. If not, we can go ahead and end it and go into the next segment.
I think that's all. So yeah, if you are watching the recording and you weren't able to be with us today, do send us that email or message, and we want to get in contact with you. Otherwise, we're going to end the recording here. And to those watching the recording, have a great trading week ahead.
Trade safe.
Everyone else. All right, so we'll stop it here.